Hey subscribers, good morning. It's Thursday, March 13th. We are still very much in a lackluster tape as I discussed yesterday with you throughout the day. We're seeing a little bit of underperformance here by the Russell 2000, by the small cap sector, which is this orange line here versus the S&P 500 or versus the SPY ETF here, but it's really marginal. We're talking about literally like a 2 week decoupling. Usually, this kind of sign will be more ominous, sort of through the lens of a 6+ month period, sort of warning sign. I just don't see us topping the market yet. If you sort of look at the new 52-week highs on the NYSE and the New York Stock Exchange, you can see those are still going strong as well. Those will start to roll over before the market does, and again, that's also sort of a 6 to maybe as much as 10 month or a little bit even a little bit more sort of warning sign. It's just not yet happening. Yes, we've seen a little bit of a downtick here in this over the past few days, but literally that's it. So I can't take this serious yet. I do think the market has a little bit higher to go at the very least. On the S&P, to me, I still think we are going to see that 1920 to 1970 area before we roll over the course of the next few months. It's only natural. We're going to take a little bit of a pause, sort of reshuffle here a little bit, and that's that. Nearer term, the moving averages I tend to focus on. I've talked about this a little bit over the past couple months. I should be focusing a little bit more with you guys. It's really using the 8 and 21-day moving average. Those are very good moving averages. You can see yesterday we once again held that moving average, the 21-day moving average after breaking the 8-day moving average. So, as long as these moving averages hold, it's really not worth getting too freaked out about anything. But beyond that, if you look at the market yesterday, really just a boring trading day. We did a couple things. Let's see, just to walk you through the trades. First of all, I bought Starbucks. Let me go to this chart here, and you'll see why I bought Starbucks. It actually looks good to be going higher. The analysis, as it always is, it's all on the blog, as well as on the daily watch list yesterday. But you can see the stock yesterday finally managed to break past lateral resistance, actually the day before, and now it really looks like it's got upside at least towards the 100-day, which is coming up here soon, around 71.80, 76.80, and beyond that, maybe you can get up to the $80 level. So that's Starbucks. That's the one trade I did yesterday morning. And then the other thing I did is I really took full profits of, I think, actually almost 6% in line. I didn't realize it was that much. I thought it was like 5%. Short position in line. It's reached my profit target. Can it go lower? Of course it can. Not too interested in being too short at this point anymore. I think the stock has more or less done what I want it to do. Again, it all came on the back of this trend break. Also, in the bigger picture, the stock rebounded here about 50 or ish so percent before turning lower. It started busting through its various moving averages, and so the 200-day moving average, or slightly below, actually ended up being a very good target level. So that's pretty much what's going on. In terms of open positions, ABX, not surprisingly with the rise in gold, had a good move yesterday. Again, this looks to be intact to move higher, but again, gold can be a very slow-moving beast, so I expect ABX to be doing so as well. As an alternative to ABX, I blogged where I quickly mentioned this to you guys yesterday. If you guys, some of you didn't do ABX, if you want to get involved in this type of trade, I think an interesting one here is Newmont Mining. NEM perked up yesterday, obviously with the rest of the market, so it's coming back above its 100-day moving average. Pretty interesting trade here with good candles supporting the whole move. Then JCPenney moved higher again yesterday after coming off its highs 2 days ago. It's, to me, still at a very interesting spot. I think the stock certainly is upside to 10 to the $10 or $11 range. So, we'll see what happens. It's a fast mover, so I'll have to make fast decisions in this, as we do, as I usually do. BWLD, Buffalo Wild Wings, yesterday recovered a little bit as well. Triple top here, and again, I always say triple tops are more myth than reality. So I think this stock certainly should be able to move past the resistance line here. We'll see how long that takes, but that's also something I think should happen. Then Tesla, last but not least, rally yesterday. I discussed this over the past couple days. It's a little bit hard to see the stock really breaking down too much, but I need to see a little bit more proof. I would love to sell some out of the money puts against my out of the money calls, 280 strike June calls that I have. That I'm short, so I'd love to sort of turn this into more of a condor or maybe even an iron condor type of trade. But if you are just playing Tesla directionally, just know that it's basically consolidating here. There's not a whole lot to do. Couple stocks on the watch list. First of all, the first thing I'd like to do this morning, if I get a chance to, as I discussed in my evening notes yesterday, is buy some Marathon Petroleum. MPC is the ticker. Beautiful move yesterday past resistance. You can also see the chart on the blog. I posted it yesterday. Here's what this looks like. I'll also add it on the watch list today so you can see it. So I think this stock here looks ready to go. It may need to consolidate. It's had a bit of a sharp move over the past few days, so it may need to consolidate more, but I'm looking to buy it if I can. And then Williams Sonoma this morning is supposed to open up, 5-6% higher, way past resistance. I think past the 63 or $62 mark. So we'll see if there's anything to do there. And then RAD, which is Rite Aid yesterday broke higher out of a pretty tight consolidation phase. Looks to me like the stock can also move higher. So that's what I'm watching here today. Again, I think as long as the broader market is kind of stuck in this rut, and who knows, maybe we'll come out of it today. But until that time, it's probably best to just keep positions, keep fewer positions on the portfolio rather than leaning at any windows. Hope this makes sense as always. If you got any questions, please let me know. Take care.